So I think we'll get going, and we'll click on to my first slide, which is to welcome you all to this webinar this morning, where I'm going to speak about business interruption insurance and the FCA test case. I'm Ben Hardiman. I'm a partner in the Manchester office of our insurance disputes practice, and one of the areas that I specialise in is claims against insurance brokers. So I've had a really close eye on the FCA test case over the last few months because of the potential implications of it for the broker market. And business interruption being the title, this talk couldn't have gone without some hitch, which is that having sat in my bedroom for the best part of 8 months now with not a single problem with my Wi-Fi, 20 minutes ago it crashed, and I am currently using my interrupted phone signal, so hopefully this will come across okay. So I'll just on to the next slide to say there are a couple of points of housekeeping before I kick off. One is that the session is being recorded and that the recording will be available afterwards. And secondly, there will be some time for questions at the end, so please do feel free to post any questions in the chat box. These will be moderated and presented by my colleague Harriet Strevens once I've concluded my talk, and I'll do what I can to respond to them when I've finished my part of the webinar. If there's any we can't get to, then we'll pick them up by email afterwards. And so to the next slide and the agenda for today. I'm going to give you a brief overview of BI cover. What is it? Why is it needed? That will take you neatly into the FCA test case and the decision so far. And then I'll conclude to consider where the test case is going and give some thought to the potential implications. So, BI cover generally on the next slide. It is not a compulsory insurance in the UK, but it is often overlooked and misunderstood or misinterpreted by policyholders and brokers alike. But its importance to industry in the UK can be seen by the value it provides. On one estimate that I found in preparation for this talk, the suggestion is that insurers pay out something in the region of £22 million worth of BI cover every single day. Now, whilst businesses will generally be covered for damage to property caused by a major catastrophe, such as a fire or a flood, a standalone commercial property damage policy will not extend to cover the loss caused by an interruption to the business and the consequential loss of revenue or profit caused by that catastrophe. Now, generally speaking, the trigger for BI cover is damage of some description. I'm going to come on to some exceptions to that shortly because of their importance to what is currently happening. So let's just consider, in terms of the why, a fairly common scenario. So one evening, factory closes, all members of staff go home, the doors are locked. Overnight, a pipe bursts in an upstairs room, and the policyholder returns the following morning to find the ground floor underwater and the majority of its stock and machinery either damaged considerably or irretrievably. Now, whilst replacement of the stock and the machinery will be covered by a property damage policy, the BI policy will provide assistance to the business during which it is either entirely inoperable or while it operates at a reduced capacity. Capacity is going to be reduced because it's going to take some time to replace the machinery and the stock, but it's also going to take time for the building to dry out, for example. So it may be necessary for alternative premises to be obtained. Now, moving on to what is covered, this ought to be a simple question. It's no different to any other insurance indemnity. How much is needed? Well, there's two key issues for policyholders to consider. Firstly, pre-inception, so this is before any issues have occurred, a business has to consider the likely time it's going to take to return to a trading position prior to the catastrophe or the event which gives rise to the cover being required. Now, that's commonly set 12, 24, or even 36 months for a particularly difficult business where its requirements to get back on its feet are particularly onerous. Secondly, the policyholder has to consider how much cover to obtain. And this is where problems arise for policyholders and brokers alike because of the treatment and the description of the terms in the policy. In general terms, though, a BI policy doesn't provide cover for all turnover loss because some of the costs of the business are variable and they reduce as turnover reduces. So the BI indemnity, in general terms, covers the fixed costs of the business, such as rent and wages. It covers the net profit of the business that's likely to be lost. And finally, they will generally provide cover for the increased cost of running the business. So, as I said in the earlier example, it might be that alternative premises will be required. And so finally, to the scope of the covers available. Now, many insurers offer various types of BI cover. And as I'll come on to explain in the context of the test case, there are numerous policies out there in the market, and they offer various different types of cover, and they offer different extensions which offer policyholders a choice because of the impact on the cost of the cover. So, for example, some policyholders may only want cover to provide for the increased costs of working as a consequence of the damage sustained. It may be that their turnover is unlikely to be significantly affected by damage to property. It might just be that they need a different premises to operate from. Secondly, and this is of relevance to what's occurred with the pandemic and for the balance of my talk, as I said earlier, BI cover is generally predicated on there being material damage to the policyholder's property. However, BI policies have evolved, and many insurers now provide extensions to provide cover for events which don't require damage. So, for example, where visitors to the business are prevented from accessing the property, or, for example, where a business is affected by vermin, by murder, by suicide at the vicinity of, or within the vicinity of the premises, but also disease. And it's these two issues which became the subject matter of the FCA test case, which I'll now turn to consider. So next slide. BI cover has very much come to the fore as a result of the unprecedented circumstances created by the pandemic. Many businesses have suffered loss as a consequence of events caused by COVID-19, and they turn to their insurers to make claims seeking cover under the BI section of their commercial insurance policies. Now, the vast majority of commercial policies sold to SME businesses in the UK provide either no cover for COVID-19 or had a valid exclusion in place to cover the losses sustained as a result of it. But it transpired that there was a cohort of policies where there was a potential for dispute about whether cover for pandemic-related losses existed. And as a result, in May 2020, the FCA, the Financial Conduct Authority, stepped in to announce its intention to obtain court declarations which were aimed at resolving the contractual uncertainty that it saw around the validity of many of these BI claims. A sample set of 21 policy wordings was selected across 8 insurers, and that is estimated to potentially impact on up to 370,000 policyholders. Now, just to give you a potential idea of the value of this litigation, the FCA estimated the value of around 8,500 claims that it was aware of having been made by June 2020 was in the region of £1.2 billion. So if you extrapolate that out across 370,000 affected policyholders, the potential implications both for business and the insurance and reinsurance industries is extremely significant indeed. The matter proceeded to trial in June 2020, and the High Court handed down a 165-page judgment on the 15th of September. Now, obviously, there isn't time today for me to undertake an in-depth consideration of that judgment. But what I've tried to do is to contain some of the key points on this slide in front of you. And in particular, as I said earlier, the policies under consideration all fall within the category of the non-damage extensions I talked about. And there are 3 types of wording that were considered. The first is the so-called disease wording. Now, there are variations between each of the insurers' wordings, but in general terms, these wordings provide cover for interruption or interference with the business as a consequence of the occurrence of a notifiable disease or a human infectious disease within a specified radius of the premises. Now, insurers have argued that cover was intended to be for a local occurrence of the disease only. This isn't a local outbreak, it is all part of a national pandemic. But the court's decision, the High Court's decision, was that local outbreaks of the disease form an indivisible part of the national pandemic. And none of the wordings provide an express statement that the disease should only occur in the relevant policy area. And the court considered that to be in keeping with the nature of insurance for notifiable diseases. The reason they become notifiable is because they're highly contagious. They spread rapidly and they spread widely. So generally speaking, the policies which fall within the disease category were found to provide cover. The second category is the denial of access wordings. Now, these provide cover where a business is prevented from accessing or using premises due to action or restrictions imposed by the government or some other authority, such as public health, due to an emergency which is likely to endanger life. Now, the court interpreted these clauses more narrowly than the disease clauses. Whether there is cover does depend on the precise wording of the relevant clause, which is a classic lawyer's answer, but also how the business was affected by the government's response to the pandemic. So, for example, was the business subject to a mandatory closure order, or was it simply affected by the general stay-at-home requirements imposed by the government in March? But also there is a question about the extent to which the closure took effect. So, for example, restaurants were required to close to sit-in diners from the 26th of March onwards. On the face of it, that is a mandatory prevention of access. But restaurants were allowed to offer takeaway services, and potentially a business which took that opportunity might not fall within the category of having had its access prevented. And I think that means the effect of the judgment at this High Court level is that two separate restaurants who sit on the same wording potentially could have different levels of cover. Finally, we've got the hybrid wordings. Now, broadly speaking, these are what it says on the tin. They're a blend of the two other wordings. So they provide cover for interruption to business due to an inability to use the premises as a consequence of restrictions imposed resulting from the occurrence of a disease. Now, in large part, the court took a similar line to the disease wordings. These policies could not be considered to be limited to the local outbreaks of the pandemic, but the court will construe words such as inability to use and restrictions imposed narrowly. It's more than simply use of the property being impaired. It is the imposition of a mandatory requirement which is necessary. So once again, the wording of the specific clause is crucial, but at least the judgment provides some guidance on how to construe it. Before I move to the next slide, I just need to address the causation and the trends clause angle, because this was a very significant issue in the case. It's going to be a significant issue as we move to the next level. Insurers' argument was that even if there'd been no local COVID outbreak, the policyholder's business would still have suffered losses because of the wider effects of the pandemic, so the lockdown and the reduced footfall I mentioned earlier. Insurers relied on a first instance decision in a case called Orient Express Hotels and Generali, which was decided in 2010. And this related to damage to a hotel as a result of Hurricane Katrina. Now, it may have been a US hotel, but it was covered on a policy of insurance written in the London market. And so the case came to be considered by the English courts. Insurers also relied on trends, so specific trends clauses within their policies, which they say allowed them to adjust profit figures to take account of the wider effects of the pandemic. So the two are fairly interlinked. Now, the court gave insurers' argument fairly short shrift. They found that Orient Express was distinguishable because its facts didn't apply to the current facts of the pandemic, but that had they needed to apply it, they considered it to have been wrongly decided because the reasoning was flawed. And that was not least because the court decided its effect would be that the more serious the problem, so the broader the issues created by the pandemic, the less cover that would be available for a business. Now, one point of interest as we move into the next stage is that the judge who decided the Orient Express clause back in 2010 at first instance now sits on the Supreme Court. So it's going to be very interesting to see how this issue is dealt with. So just moving on to my final slide, which sets out the next steps. At a hearing on the 2nd of October, the High Court gave the parties permission to leapfrog appeal to the Supreme Court. Now, that is extremely rare. Parties are very rarely given permission to bypass the Court of Appeal, and it just demonstrates the level of public importance that this litigation holds. The appeals are being pursued by 6 of the 8 insurers and the FCA, and as the bottom of the slide indicates, Zurich and Ecclesiastical are not involved in the appeal. They fall in the denial of access category of wordings, and so the policies were found not to respond. It does too. And earlier this week, the Supreme Court, or the FCA, confirmed that the Supreme Court is going to sit from Monday the 16th of November for 4 days. It had previously been suggested that it might not take place until November. So all the stops are being pulled out to bring this one together as quickly as possible. And so finally, to the implications, I can't help but think that whatever the outcome at the Supreme Court, there is going to be arguments about how to interpret the judgment. That's what lawyers do, unfortunately. But hopefully what the Supreme Court will do, and as the High Court has attempted to do, is to provide clear guidance to allow insurers and policyholders to understand how these cases should be dealt with. I think it's also important to recognise that the litigation is focused solely on liability issues. BI claims often give rise to discrepancies in how claims should be valued. And so assuming the Supreme Court stays with the High Court and finds in the majority of policyholders' favour, it seems to me that there is then going to be a further time to consider how and how much claims should be paid, albeit insurers have been encouraged to make interim payments to policyholders in the meantime. When the dust is settled and whether claims are paid or not, what's the insurance industry going to do? I think the numbers help show the importance of this. The FCA estimated that more than 60 insurers had written in the region of 700 wordings which potentially could be affected by this decision. And there are going to be many other BI policies out there which had clearer wordings than those currently under scrutiny. And if you ever pick up one of these policies, certainly at an SME level, the BI cover is packaged within a commercial combined policy, which has a series of covers. The policy wording is often in excess of 100 pages. The BI cover is often 10 to 15 pages of that booklet. And it just shows the extent to which interpretation is crucial. And I think it shows the importance of clarity in wordings. And we don't know what may come down the line. What would happen if there was a different epidemic which didn't carry the COVID-19 barrier, for example? Now, I suspect that insurers will be and should be dusting off their wordings and reconsidering them in light of what has happened. And finally, from brokers' perspective, I'm afraid I think it's inevitable that brokers are going to face E&O claims. I've spoken with a large number of brokers over the last 6 to 8 months where they've been contacted by clients with grumbles about why they don't have cover, whether they fall into this category, whether there may be implications for the broker. Now, I think that getting those sorts of claims off the ground is going to be very difficult. hindsight is very much coming into play in what policyholders are saying. But I don't think it will stop people and solicitors trying. I'm aware of solicitors out there who are promoting claims against brokers depending on what happens. And so I think that is something which we need to watch out for as we enter 2021. Now that's all I have to say, but I suspect there are some questions to answer. So I'll pass the baton over to Harriet and I'll do my best to answer them.
Thank you very much, Ben. We do have a couple of questions, well, several actually. So just to kick off, one of the questions being asked is this: if a policyholder hasn't yet made a claim, should they do so now in light of the awaiting Supreme Court decision? And if they wait, do you feel they'll be penalised for late notification?
I think, from a broker's perspective, I think they should be advising any policyholder who hasn't yet made a claim and who could fall into this cohort to do so. But what is worth noting is that the FCA has stated to insurers that they should not rely on notification provisions to decline claims for late notification. So the reality is that policyholders should not be affected by a late notification, but the sooner steps are taken, generally speaking, the better.
Thank you for that answer. Do you have a view as to whether a second lockdown will be construed as a new event or occurrence? A bit of a wide question, I accept.
I think, I'm afraid, this is a good question given where we sit as of today. I think the classic lawyer's answer has to come out, I'm afraid. I think it's very much going to depend on the wording of the policy. Some of these policies are written really quite widely. So they often refer to any occurrence of a notifiable disease. Now, I suspect insurers will say that the occurrence and the notifiable disease all fall within the same event as occurred back in March. It's also worth noting that many policyholders will not be on the same wording that they were on. They will have renewed or placed new policies since, and I strongly suspect, based on conversations with brokers, that many, if not all, policies now will contain pretty tightly worded exclusions.
Thank you. We do have several questions actually, so I think we've time for just one more at the moment. If a restaurant is not able to offer or choose not to offer takeaway, do you think the claim would get paid under a denial of access clause or not? So that the restaurant...
Yes, I think the indication is that it ought to, and I wonder whether this is where there is a potential, a question mark over the judgment, in that it feels harsh that a policyholder who took steps to mitigate its loss might be precluded from claiming when it's taken reasonable steps. But I think that's something that the Supreme Court will no doubt consider as the matter progresses.
Mm. Well, thank you, Ben. I think the rest of them, given time, will need to be dealt with by email. So I'll pass the baton back to you to conclude.
Thanks, Harriet. So yes, for those questions we've not addressed, we will follow up by email. Thank you for joining me today. This is my first Cover Talk webinar, which I've enjoyed. Please do complete the feedback form, which you'll be provided with when we sign off. Feel free to propose any topics you'd like us to speak about. And remember, if you want a more detailed consideration of the case, or potentially of the Supreme Court decision in due course, or even the potential implications for brokers, do get in touch. We'd be more than happy to talk to you. And then finally, just to shamelessly promote our next session, it's a week today, Thursday, the 12th of November. My partner, Virginia Hickley, and Charlie Andrews will be speaking about a junior adjuster's checklist, and I hope you will be able to join us on that occasion. Thank you very much for joining us today.